Micron, ticker symbol MU, earnings call June 24th on Wednesday upcoming. Okay, you own Micron. You're holding it. You've got anxiety. You're not sure what to do. You're not sure how the market's going to react. Is it going to be a buy the rumor, sell the news reaction? We're going to find out, right? In this video, I'm going to share with you guys three different forces that you got to keep your eye on. Make sure that you're aware of it. That way, you know how to be proactive in what you're going to do with your Micron shares. If you're looking to buy Micron shares, right, this will help you out as well. Okay, we're going to go ahead and cover implied volatility. We're going to cover the put call ratio. We're going to cover the hype that's already priced in. And then I'll give you a clear game plan for whether you're a buyer, whether you're a seller. That way, you get an idea of how you should act and react in this situation right here. Hi, everybody. My name is Curtis. Thanks for watching and thanks for joining me. We're going to go ahead and move forward on this. But before we do that, hey, give me a thumbs up. Click that subscribe button for me. And if you've got any questions during the video, if you've got any comments during the video, drop it into the comment section for me. Questions, I'll respond. I promise you that. Thank you very much. Now let's get right into it, okay? What's going on with Micron right now? So Micron, they practically make memory chips used for computers and AI servers. You already know that. Everybody knows that. That's why you're here. Okay, the stock has run up to record highs because AI needs tons of memory. The godfather of AI, Jensen Huang, right? He had recently said, hey, Vera Rubin, which is their latest and greatest GPU, it's going to need tons more memory. Okay, their NVIDIA is also getting into the CPU game as well. And he also mentioned that the CPUs need more memory. So memory, that's why memory is sold out right now. It's scarce. Okay, everybody needs it. That's why Apple just at the end of this past week mentioned that they've got to raise their own prices on their iPhones because of the cost of memory. Okay, so that in itself is already a leading factor to why memory is going to be so valuable. Okay, and that's a catalyst going into June 24th for the earnings report after close of market. Okay, so I just want to share with you all. Okay, options are pricing a roughly 14% move that week, and implied volatility is over 100%, meaning options are very expensive. Now, I know you're probably wondering, okay, if you're just buying the shares itself, if you're just selling the shares itself, why is IV implied volatility and why are call put options important for you? I'm going to get right into that and continue watching because I'm going to share with you why you should be keeping your eye on that. Okay, the key idea for all of this. Okay, and I'm going to share this just flat out, and you already know this. Okay, expectations for Micron is sky high right now, sky high to say the least. Here's our path for this video, okay? First, the key tools. Implied volatility, I had mentioned that already, and the put call ratio. Then the story, why the hype matters, why Micron's recent earnings had done what it did, and then how big investors are positioned. Finally, again, I had mentioned at the beginning of the video, okay, this is probably why you're here, is I've got a simple game plan for whether you're a buyer or seller, okay? So stick around. It's going to be a fun one. But before we get into all that, right, I want to share with you guys where Micron's at right here. I've got this chart pulled up, okay? And this is the past 5 days of Micron's trading. They were at roughly about, in between 950 and 1,000, okay? And now, okay, they're at 1133, close on Friday, okay? They had a pretty darn good past 5 days climbing back up. They had a couple of different catalysts, such as the re-rating of their targets, such as the news in the Middle East conflict with the deal, etc. Right? There's been a few different movements that has helped Micron climb up a little bit, but I just wanted to share this so that way you get an idea of where we're standing right now with Micron. So now that we've covered that chart, okay, we're gonna get right into the implied volatility. How big does the market expect this thing to move, right? I mean, that's implied volatility. That's the market's guess of how big the move that is coming is coming. Okay, it tells you practically the size, not whether it's going to be climbing up or down, right? I mean, that's why you'll hear, okay, 10% in either direction, 12% in either direction, whatever it is. Okay, so a high implied volatility or IV means options are expensive and people expect big swings. All right. Typical before earnings. That's the volatility. Low implied volatility means cheap options and calmer expectations. Importantly, implied volatility is forward looking and can push option prices around even when the stock is flat. And why? I mean, why do investors pay attention to the IV? I mean, I'm going to tell you, okay? Even if you never trade an option, implied volatility, IV tells you how much movement the market expects. And you want to know that as an investor, right? Think of implied volatility like a weather forecast, practically. A low IV forecast is going to be calmer weather. The stock may move a little bit, but of course, on the flip side, a higher implied volatility, the forecast is like a storm. Okay, the stock could move drastically, could move dramatically, can move violently. That's the practical takeaway of this right here, and that's, I mean, to be completely candid and upfront, that's what we're expecting with Micron, right? They're over 100 on the implied volatility. And so, I mean, it's very high before earnings. That means buying shares are riskier because a large drop is possible. And then, of course, selling shares before earnings reduces the risk of being caught in that big storm. So, waiting until after earnings can reduce uncertainty as well. But you don't know what's going to happen to your stock if you end up holding it, or if you didn't buy it yet. If you're a buyer looking at this right now, right, and you're just not sure. I mean, you might miss some upside that you didn't want to miss if the stock jumps. But at the same time, right? I mean, if you ended up selling, then you'd be glad that, I mean, if it weathered a storm and took a gap down, then you missed it. You got out at a good time. Anyways, the main thing, IV tells stock investors that, hey, be prepared for a big move, and that's what you want to know. That's why I'm sharing this with you. That's why it's important. It should be important for you at least. All right. It doesn't tell you whether the stock's going to go up or down. Again, I mean, it tells you what the market expects. Large price change, and your timing may have a bigger impact on your results than usual. At the end of the day, if you're thinking about buying shares, okay, again, the high implied volatility means that the stock could jump higher after earnings, but it also means that the stock could drop sharply downwards if you buy it before the news. If you're taking a risk of a large move, uh, I mean, you're practically taking a risk in a large, right in front of a large move in either direction. Practically, that's what I'm trying to get down to. Okay. Now, if you're thinking about selling shares, high implied volatility means there may be a chance to sell at a higher price if, of course, the news is good and the market sentiment is driving that upwards. It's going to be, I mean, just to be straightforward, it's going to be really hard with Micron, and we're going to cover that why. So don't leave yet. Watch the rest of this. We're going to cover exactly why it's going to be really hard for Micron to gap up. Okay, but if the news, so talking about selling the shares still, if the news is bad, the stock could fall before you even get a chance to share. So those are some things you must keep in mind. Here's another really important force that you've got to keep an eye on, okay? Just as an FYI, okay? This stuff that I'm sharing with you all, you can find the information on bar chart, okay? It shows you the implied volatility. It's going to show you what I'm going to show you right here, okay? The put call ratio, okay? We're gonna give you an idea what it is, and it's practically the volume divided by, or the put volume divided by the call volume. Okay, those options there. This is a quick read on fear versus greed, essentially. Okay, so what it means is that if the put call ratio is above 1.0, that means that there's more puts. What do you think that means? Okay, if there's more puts, that means that the sentiment is fearful. It's a bearish mood right now. Okay. So they're trying to protect their investments with puts. Okay. Meaning they're hedging. Now, on the other side, okay, if it's below 1.0, that means that there's more calls. That means, to me, in my opinion, it's a greedy and bullish type sentiment outlook out there. Okay, what that means is that, the call options, okay, they're setting up all those call options because if the price climbs, they want to be in on that game. All right. Now, many traders read it as a contrarian signal. Okay, extreme fear can mark a bottom, and extreme greed can be a top as well. Index options usually show higher ratios because big funds use puts, okay, again, to hedge portfolios. And so, how does this affect a stock's price? I mean, that's what's important for you if you're buying or selling, okay? The put call ratio helps show whether investors are mostly bullish, right, which is expect whether they're expecting the stock to go up, or mostly bearish, which is expecting it to go down. That's why you want to keep your eyes on the put call ratios. All right, that way you get an idea of where they're setting up at. All the what they so-called smart money, the institutional buyers, the large sum of money, where that's going. Okay, lots of call buying, low put call ratio. Okay, people are betting the stock will rise. They or this can create more of a buying of the stock, which will essentially push the price higher. Lots of put buying. Okay, people are betting that the stock is going to fall, and this can create more selling pressure, which may push the price lower. That's exactly what you want to know. What does this mean for you as an investor, right? A very high or very low put call ratio can be a warning that too many people are practically on the same side of the trade, right? Too much of that market sentiment on one side, that they're thinking it's going to fall, they're thinking that it's going to climb, one or the other. If almost everyone expects the stock to go up, in my opinion, that's, I mean, well, what I'm trying to say is if everyone expects the stock to go up, that's leaning more call options, okay? What my opinion is that there's not going to be a lot of buyers left because meaning buyers already bought. That's what I'm thinking. That's my opinion, okay? So what happens if bad news comes out? The stock could of course fall quickly because I mean we're out of buyers to kind of counteract all the selling, right? Okay, if almost everyone expects the stock to go down, meaning majority are leaning towards the put options, much of the selling may already have happened. That's my opinion. Many people who thought it would be bad already sold off. That's my opinion. If good news comes out, the stock could rise quickly as investors change their positions. The main idea is, use use the put call ratio to understand investor sentiment and whether trade looks crowded on either side. That's what I wanted to share with you. Okay, it can be helpful with deciding whether to buy or sell, but of course, right, you got to take it with a grain of salt. It doesn't predict the future, or it doesn't guarantee the direction that the stock's going to move in. It's just a sentiment. It's just a sign. All right, but it's still important for you to see it. On this slide right here, I've got a whole bunch of different stuff on here, right? But the main point is I want to show you all what the market is pricing in right now. All right, this was captured just on June 18th data after the close, okay, ahead of the June 24th earnings report. Okay, so implied volatility currently at 103, roughly around approximately 103%, right, which is obviously really, really high. Okay, put call ratio. Okay, 1.76%. The total volume, more puts than calls trading, which, in my opinion, is a cautious defensive tilt right now for investors. Expected earnings swing is going to be 14% in either direction, meaning that it can gap up or down 14% potentially, right? With the situation that they're in right now, and then front week put call, okay, 2.43 puts expiring just after the report outnumbers calls 2-1, heavy hedging into the print right now. Okay, so what does this mean for the shares? Okay, the market is pricing a large sudden move, and traders are hedging heavily. So expect an outsized gap on June 24th and set your buy or sell levels before the report. So essentially, they are already right now, okay, fearful because they're protecting their gains that they've had already. Remember that slide that I had shown you with Micron already kind of climbing up in the past 5 days? Well, if you think about it, okay, the smart money, the institutional investors, they didn't just buy the stocks recently. They've bought it, several weeks ago. Okay, and so now they've gained, right? Remember that stock graph that I just showed you guys with Micron? It's gone up already in the past 5 days. So they've already got hundreds of dollars of gains. They want to protect that. They're buying the puts. That's what's leading to all this right here. I wanted to share this right here with you all. I came across this article just today. Okay, it's Sunday, June 21st. Okay, and I'm gonna post this video today after I'm done with this recording right now. But this article came out today, and I wanted to share it with you. Okay, this was on Yahoo Finance by Rich Dupree, and it says Micron must do this on June 24th, or its stock could crash. Okay, so I'm gonna hit up the bullet points right here for us. As you can tell, it came out Sunday, June 21st, 8:45 this morning Pacific time. Okay, Micron must beat estimates and raise guidance on June 24th, or risk a sell-off despite an 830% stock gain over the past year. Wow. Okay, I'm gonna tell you right now. Okay, that's completely accurate for any stock practically. Okay, but in my opinion, okay, they can't just beat estimates and raise guidance. They've got to impress beyond belief. Okay? They've got to impress beyond belief. That's my opinion. Second bullet point. Analyst expects 268% revenue growth and 930% earnings growth year over year. Wall Street now demands a beat and raise to sustain momentum. Same conversation there. Micron trades at under 10 times forward earnings with PEG ratio of 0.07, giving it more valuation cushion than AI peers like Broadcom. That's been spoken. I mean, okay, it's because they are a memory chip and they company, and they've always been a cyclical commodity. That's why the forward PE is always. I mean, it's low. So I mean, at the end of the day, right, unless that concept, that mindset changes with the memory companies, if the memory companies end up being moving away from being a cyclical type company, then they will start, giving it different valuation outlooks. But at this time, right now, right, it's still very skeptical. If you don't know that already, you probably do because it's all over the news. But they're still skeptical about that. I just wanted to share this with you guys. You guys got to be informed of that. Now let's go ahead and slow it down a little bit. Be a little bit more mindful, okay, about this whole story with Micron. Okay, so essentially, right here, I'd like to share with you guys that, of course, the good news may already be priced in. That's why the stock has climbed so much. Okay, hot stocks often run up before earnings on excitement. Okay, that's to buy the rumor. And if you follow other stocks, I mean, that's what causes all this anxiety and fearfulness, right? Is that, I mean, the stocks run up and then after the earnings call, it dips down. That's a scary thing, especially if you're holding Micron already, especially if you're up on a lot of gains right now. Analysts, they raise targets, and of course, everyone hears memory is sold out. So a lot of good news has already been priced in. That, of course, sets a very high bar. So to pop, again, in my opinion, okay, Micron must not only beat and raise guidance, okay, they've got to impress. It's got to be beyond belief. They've got to have a strong, strong, strong catalyst thrown into that forward guidance, and of course, definitely at least beat their estimates. If the news is only good enough, right, that means that they barely beat estimates. Forward guidance is already expected. The stock, of course, can still drop. That's the sell the news. Okay, so that's why I say I'm going to continue to drill this point right now, which is they must they must blow up. Their forward guidance must provide a catalyst that nobody knows of. Okay, in order for them to just skyrocket again. Okay, so before we get into sharing with you all what you should do if you're looking into selling the stock, if you're looking into buying the stock, okay. But before that, I want to show you all some historical trends. Okay, that's something that you should keep an eye on too. How did it react the last time around? So let's take a look at Micron, how they reacted in the last few reports. June and 2025 were small or flat. Okay, you see that to plus 2%, plus 3%. Okay, December 2025 was a beat, and the stock jumped about 10%. All right, that was pretty darn good gain. And at that time, I mean, it was like that was when Micron was starting to really get into the picture. But if you take a look at it, okay, expectations have built already, and by March of 2026, it was a big beat. Okay, a big beat, and the stock still fell about 8%. That's the classic sell the news. That's what I want to share with you guys. The lesson again is that the beat alone is not going to guarantee a pop. The current setup looks a lot like March right now, in my opinion. Okay, there's a huge run up and sky high expectations. Now, I want to be straight up with you. Okay, I don't know what's going to happen. I really don't. I'm curious myself. Okay, how is the market going to react? I will never try to make that type of prediction, but I will always try to gather and analyze all the information that's available to me, okay, to try to get an idea of where the market's moving. And that's exactly why I put this chart right here for you all. I made this slide right here for you buyers, okay? If you're looking to buy, if you want to buy Micron because you want to get into that memory hype, okay? Memory hype, and it's, in fact, it's not just hype. I think it could be sustainable. That's my opinion. It's because the the AI development it's going to be for, in my opinion, definitely for the next decade. I mean, we are barely at agentic AI. We haven't even gotten to robotics, okay? Haven't gotten to the cars, okay? All that stuff is going to need memory. We haven't gotten to, the data centers in space, etc. Of course, don't get me wrong, things can change, okay? Technology can change. The way we need memory can change. But that's my thoughts right now. Okay? So if you want to buy shares, okay? Okay, my opinion is don't chase the run up right now because the stock is pricey. A lot of good news is already priced in, okay? Then you want to decide your entry point in advance as well, okay? Buy in stages rather than all at once, okay? If you've been doing the dollar cost averaging and buying Micron because it's been hot for the past year, then that would have been a good situation. You can still do that as it continues to run up, right? The targets are still up there right now. The 1700 high, I think. Okay, and then of course, you want to keep some cash ready for a pullback. Okay, the sell the news, that's going to be perfect for you if you want to get in. All right. After the report, a strong beat plus raised guidance, okay, beyond belief can be a buy signal, and sell the news drop can, of course, hand patient buyers a better yet entry point. Okay, that's where they can gradually add if they want. For long term, the AI memory story can reward patient shareholders. That's my take on this right here. Okay, so if you're buying, just be mindful of these things. All right, now this is for you sellers. Okay, if you're holding the stock already and you're thinking about selling, you've got some anxiety, you're up on some gains already. Okay, if you want to sell, if you're sitting on big gains, consider locking in some profits before a coin flip event that you can't predict, right? That way you probably won't feel so bad about it. And then on top of that, you might be able to get some of the upside, right? If you don't sell at all. Okay. So, anyways, my opinion is that, hey, set a sell price or stop so a sharp gap down can't erase the gains that you've already made as well, right? That way you'll feel a little bit more comfortable in case it drops a little too far down there. Selling part now and keeping the rest, as I had mentioned before, right? It lets you exit without making an all or nothing type call, which might make you feel a little bit more psychologically safe, right? That's just my opinion on it, not financial advice, but that's my opinion, and I wanted to share that with you all after the report. Okay, weak guidance lets you sell into bounces as well, right? Rather than the panic low. Okay, so what does that mean? Okay, selling into the bounce. Okay, so let's just say we'll start from right here. Okay, so let's just say it starts to go downwards a little bit, but then it kind of climbs up a little bit again. That's sell into the bounce. That's where it bounces back up. So before after it bounces, it might end up going back down like that right there. That's what I'm talking about. So that's another strategy for you. And if anything, right, if you're depending on how you're investing, just hey, just letting you know, okay, just be mindful about how you make these moves, and try to write it down, jot it down, see what's most palatable for you, what you're going to be most happy with yourself when you make these decisions. All right. let's go ahead and wrap it up. Okay, thank you so much for continuing to join, stay and stick around with me throughout this entire video right here. So to wrap up, Micron's AI memory story, okay, it's strong, but you got to remember the stock is crowded. Okay, the good news is already expected. Okay, a big move is likely, and the direction, of course, is going to depend on the guidance, not just the beat. The high implied volatility, the high IV, the bottom left box, okay, right now, it favors the sellers. You got to know that. All right. It makes buyers pay up if they want to get in. That means that it's costly right now. And of course, the holders. There's a lot of holders hedging right now. Okay, so ultimately, hey, plan for a 10 to 20% swing and decide your buy, sell, stop levels in advance. Be prepared. Whether you buy, sell, or hold, go in with a plan for both outcomes. Okay, don't run this off of emotions right now. I mean, know what you want to do and when you want to do it. So that's all I've got for you guys. Hey, thank you so much for watching. My name's Curtis. Hey, if you got any comments, any tips, drop it into the comment section for us. All right, I'll respond back to questions as well, or and of course even comments. All right, and then of course, you know what? I mean, I appreciate all those that have subscribed, that have liked my videos and stuff like that. But hey, at the end of the day, if you don't want to click that like button, you don't want to click that subscribe button, I'm happy with you watching, joining. Just check out my videos whenever they come out if it helps you out by any means. Okay, thank you so much. It's Curtis. It's Sunday. Hey, I hope you have a great rest of your weekend. And hey, best of luck. June 24th, earnings call. Be ready for it. Take care. Make it a great one.